Good morning. Yeah, what do we see? What do we know from yesterday? We can see on the 8-hour chart, we're still very, very clearly in the channel that we discussed. This, purple. I'm going to go ahead and change it to purple. There's two clear lines here. Let's go purple. On the daily time scale, kind of thing, 8 hours here, it's obvious. Right now we need to hold the line. We have to hold the line at 23,750. So basically what I'm doing today, anyways, I know there's no one out there listening right now, but what I'm going to be doing today, so I get the idea in my own head, is just kind of setting myself up for the day, looking at the charts, trying to understand where my own trading will be focused. We need to hold the line at 23,750 BTC, obviously. Otherwise, we're in for a higher probability of collapsing. And we do have some support, 23.6, and it's a descending support, unfortunately, in this case. So if we can expect that if this is, every one of these lines, right, is representing a force in the market. There are individual actors or collective actors. Ultimately it's collective action, but a lot of these big moves are coming in within minutes, right? And if they're coming in within minutes, it means someone is well capitalized, essentially. This is not individual retail traders coming in and making these large moves. And in fact, if I'm not mistaken, on which time frame is it? It is actually one of the largest. So we had it within the past 16 hours. We had one of the top 1, 2, 3, 4, 5. One of the fourth highest volume in 1 month in the past 30 days. As I've said before in yesterday's stream, we had price and volume divergence. Price volume divergence is very clear. Price is going down over the past days, while volume continues to rise, which means someone is scooping up these sells, and you can kind of see that in this line here, actually this simple orange line, where we are clearly hitting support. The volume's increasing as well on the upside. So you can have moves, lines that are going from bottom to top, top to bottom, left, right, left, and those are kind of the four primaries plus just horizontal and vertical. But vertical doesn't make sense, horizontal doesn't make sense. So we are tracking price movement over time, and time is the x-axis. So we're essentially here using a linear regression modeling, and it's oversimplified. But again, the line is, imagine a water faucet, right, or a dam, right, and the dam is being put up as the water is rushing in one direction or the other, right? And so at this stage we can see here that the dam is descending. So it's like okay, we're going to go ahead and support this, but we're going to let it continue to fall. We're going to buy it. Probably, in my best estimation, traders are then taking their profits along the top, who are actively trading this market and creating this setup. Let's go back to orange. Let's turn off. I don't know why it keeps defaulting to this. My days. Extend right line. Okay, so yeah, I mean, and anyways, this is the 8-hour chart, but so the perspective isn't that clear. But if we drop down to maybe, let's see. So we see, okay, the long-term trend is obvious. We're in a channel. We're in a rising channel. There's no question about that. You know, we back in June, we had a nice, unfortunate collapse, and we do have the same. And we're slowly recovering, wavy, sideways, pretty sideways action, relatively speaking, but it is a upward sloping channel. We are in that channel, bumping now against the bottom most part of the channel. We've been riding that for the past almost 4 weeks, essentially. And so that means out of the past 3 months, the past quarter, you know, we've been rising for most of it. We've had a couple of green candles, but we're still in the dumps. There's nothing to be excited about. However, from that previous fall, you know, an important thing to watch are the fib lines. And we are approaching, and we have been approaching and really testing and being rejected from on multiple occasions already recently. And you can see these really strong attempts here too, it looks like, anyways, to get us up and over some of these important lines. But anyways, we're testing the golden pocket. That's the 0.6. That's the 0.65 and the 0.65 and the 0.618. It's the golden pocket, 0.65 and 0.618. And we can dive in if you're interested in why that's important. But essentially, if just chart it out, play with it, grab a trading view chart, grab the fib tool, set your marks at 0.618 and 0.65, and take the highest, take the significant move that you want to look at. You can, it's not ever clear exactly where the primary mover is moving from, because oftentimes right before a dump there's a big pump, and right before a pump there's a dump. And so that's oftentimes liquidity providers or market makers trying to steal retail funds, who get over leverage and just get wiped out and liquidated before they take the move in the opposite direction and enforce those liquidations. It happens over and over and over. It's certainly happened to me. I've learned my lesson 1,000 times. Okay, not 1,000 times hardly, but nonetheless, it's certainly a factor. And there's usually also at the golden ratio and around the 50% mark, which actually, let's see. I know I have too many charts and lines and stuff on here right now. This is gonna be, I'm gonna bump the size and change it to dotted actually, and I'm gonna say the 50% line is gonna be yellow. Okay, I'm gonna change that up actually. So 50% is yellow, and actually, anyone with a 20x a 20x, move here, or 20x leveraged position on either side now, right? On the down, on this side, anyone that got caught down here, or any of these, actually those guys were wiped out much sooner than that. But we're now actually, this is a very important liquidity zone for traders, and that's why it is often highly contested, and there's a lot of volatility in this space because the people who are trapped are trying not to be trapped anymore, but once at some point they're going to get liquidated or hit their absolute limits of pain, and then they will start having to market sell and get out, and it will push it very quickly back in the opposite direction. We can see it over and over and over at various time scales, right? So it's like here's a smaller time scale of a similar move, right? We're still on the 8. If we brought it down to a lower view, we would see that this isn't just straight lines here as we see them here, but this is the same. And look, it's like right around the 50% mark. There's just no stopping it anymore. This is just absolute destruction for anyone trading in these short-term zones and taking large amounts of leverage. And in fact, I think my numbers are off. I need to look at that. Leverage percent change to liquidation. So be careful with leverage is actually the message of the day. Most days, in fact, it's be responsible, especially if you have family and friends and your psychology is already loose or sketchy. Seriously, take care of yourself, and let's try not to gamble so much, right? But it is a gamble, obviously. But I mean, look at these moves here. These are really really fascinating, right? I mean, it's like they're these huge, very quick bumps back and forth in either direction. They're liquidity grabs. I don't know how to think about them in any other way. We can talk about that more as we go. The volatility and the range is tightening. It's very obvious. Like these are quite large, 3-4% moves, or no more than that. Sorry, but on a daily basis, we're talking 3-4%, 5%. This is already 13%. The channel is basically a 15%, 10 to 15% up and down. So anyone that's trading just this channel can be very profitable. However, you can see it takes many days. This isn't a day trade type setup. The volatility is just too intense in my opinion right now to trade on a day-to-day basis. So accumulating, having a good dollar cost averaging strategy is highly recommended, and I'd be curious to know what tools you guys are using to do as such. Is anyone out there coding their own trading bots or DCA tools or anything of that sort? That'd be awesome to hear from you. But you can see, anyways, back to the point. There's a lot of resistance at the these golden pocket here as of the past week or so, and we actually have hit it pretty much a couple of times, 4 or 5 times, and quickly rejected. But in fact, at the same time, we're also so close to the bottom of this channel that there's clearly a ton of support. Someone, or collectively, lots of people have already identified this channel here and are buying the dips. What's going to happen over the next, what is this, next, 5 days, 7 days, by mid time next week, it's highly unlikely we even make it that far. Usually we break out of these, if you look at that, this is you could see this as like a rising wedge. Oh, sorry, a little bit deeper, right? But you could also look at this as potentially also like a larger rising wedge, right? I mean, these patterns are everywhere and arbitrary in some sense, but they do tend to be played by retail traders. So we can expect, some additional volatility going into market open today. We have Asia online right now trading. Clearly, they made some noise last night. They brought down the price significantly at the end of the day. They're going to be closing up shop soon. And so we'll have to wait to see what the U.S. does. It does feel like, this is totally gut instinct, but it's obvious we are being stopped here, but it's not obvious whether or not we're going to continue down further. 3,500 is what I was talking about last night, that it seems likely. But of course, these lines, as I've said before, these lines are not, see these, and this is support. So if I'm looking for the support lines, I'm going to start on the bottom right, and then I'll try to, identify it. The dashed line is the trend setting line, like that's the 1-1. And so, like, is it a surprise that these line up? It shouldn't be. And you can adjust it so it lines up slightly different. And of course, I don't know if this is actually the accurate modeling for this line here, but let me get rid of the orange one. Hold on. But you can see that this is potentially a resistance flipped support, descending support. Okay, yeah, accumulation. That's what this. These are the accumulation. This is the accumulation fan. Yeah, this is the accumulation fan. So you can see that in general, people who are wanting to run this line will not want the price to rise. So they'll be selling here, selling here, selling here, selling here, and probably selling all the way into all these lines, but eventually buying then on the way down, buying on the way down, buying on the way down, buying on the way down. And it depends if they were actually selling into this or just waiting for their opportunity. But of course, the accumulation is here shown by reflecting or bouncing the price in the opposite direction. So we hit this wall, continue to slide further, and we very well could continue to slide further, maybe after another small pump, maybe back to 2,400. And that's kind of the fear that I have right now. We have the volume control line is at 24,000. Traders, big market makers, they tend to trade at whole numbers, quarter numbers, and like eighths, that sort of thing. And the biggest is the whole number, right? Which of course the Gann Fann is also whole numbers and quarter numbers and eighths and so forth. So that's why these patterns work. That's why I think they show up everywhere. They're natural patterns, and they're kind of simple in some sense and consistent. So anyways, the idea here, there seems to be a short term, anyways, past few days resistance along this line that's not letting us make much progress towards the golden pocket as we might like, or I might like, anyways, because I am rather bullish than bearish. But in order for us to get out of this, we have a lot of work to do. We need to get out of this channel first. We need to get through all of this resistance. Whoever's down here trading this, and it could be It could be that I have it wrong, obviously. They might not be here in time. They might be, here in time. This actually might look a little better, and it might not be trading with that, but more like that. Obviously this could be the line actually of interest. And in fact, because of the, now that I look at it a bit from this perspective, this is where all that volatility was. This is where perhaps we did in fact switch from resistance to support. And when that happens, you see more volatile candlesticks because, in my mind anyways, the market is realizing that shit, I need to get out of all my old positions. I need to bring the price back down or bring the price back up so I can get the retail traders on board, take my orders, and then I'll let the work do its let the market do its thing, so then they can start collecting on the other side and trade the other side. And anyways, I mean, so we can see it here the same as we saw it before. There could be very well a descending, we could be in a descending triangle here of sorts. And so we could still see ranges between, 24 and quickly probably falling through. It won't take us, it doesn't have to take us more than a few days to get all the way back down to 22. These volumes are indicating to me, again, volatility. There's going to be large moves coming up. But if we can go the opposite direction, we need to get above and back above some of these key Gann Fanns that are longer term. That you see this white line. I can show you where that's coming from, but it's there for quite a long time. So we need to get back over 24,500 and more like 24,600 at this point will be where I would expect we would pop from where we are now, maybe hit this resistance, come back, retest the channel bottom, or the first step of the bottom, and then try again to overcome this golden pocket. And if we do, again, there's two options. We're going to hit the golden pocket and get swiftly rejected, just like every other time. We might hit the golden pocket, go up, fake out massively, again, collect as much liquidity from retail traders, because that's when YouTube's going to go crazy. Bulls are going to be like, yeah, bulls on top, bulls on parade, let's do this, rah! That sort of stuff. And then the market will, the buyers who are actually influencing it will turn their cheek and let us break through actually a strong break back down to the downside. And then they will be collecting all your bags. You'll be holding all their bags up here, which of course is just it's a mess. So that's an option. Or we could ideally come up, retest, and then the 25,500 level will be maybe 25,000 in general, 25 to 25 to 25.5. 25,000 to 25.5 to have the bullish scenario play out. And it would have to retest there and then continue up. And then the next level we'd be looking at would be about 26.8 on the short term. But this, when I say short term, this is still like easily out to the next part of next month. And we do know that September tends to be the start of the opposite direction of whatever the summer was. So people are probably anticipating bullish activity right now and setting themselves up. It certainly looks like accumulation is happening right now at these lower levels. And so I'm very bullish going into September, but very cautious at the moment to trade, because at least the longs and looking more towards shorting short term, although I really don't like to. But you know, you got to make money. So that's where I'm at. I hope it was somewhat useful for you. Bye, guys.